It's 2023. You don't own a home. You're missing out on that average of $274,000 in equity that United States homeowners have.
I said average. Not everybody has that.
For these homeowners, later down the road, it gets even better. You have 34 million United States homeowners that live free and clear of a mortgage. They paid it off already. It's done. They have 100% equity in their homes. Owning a home has always been and will always be better than not, especially when playing the long-term game. Even if it's a difficult time to buy or even a bad time to buy, owning and giving that investment time to grow is where tons of people have built their wealth. So what exactly is stopping you from owning a home, right? The current issues that we have right now in our mortgage rates, prices, and income. If we take the time to look at some numbers, right? The average mortgage rate in Maryland right now is 7.57. The average home price is $486,000, and the average income is $70,000. Let's just say somebody purchased with these numbers right here, right? That means that their monthly mortgage payment would be $3,687 a month, or $44,000 a year. That's more than half of their income. That's not even including any debts. That's not even including the actual cost of living. Like, bro, that's not affordable. Seriously. Let's also mention that if you go in at that mortgage rate with a 3.5% down payment, over the next 30 years, the cost of that loan is going to cost you upwards of $1 million. And again, that's without debts or the cost of living included. So real quick, there's a few reasons why it's actually like this. You've got job market, inflation, treasury and bonds, and supply and demand. The United States has a really strong job market right now, so the people that need to keep up are doing so. They have the capability to purchase, and they're doing just that. Then you have the Fed trying to tame inflation by slowing consumer spending,
That includes the people that are also buying the homes.
while also bumping up short-term interest rates. And this trickles down to things like mortgages, making them more pricey. And then you have the bond market, and in the simplest terms, it's the yield on 10-year treasury bonds that has the largest impact. This yield serves as like a baseline for mortgage rates, and when the yield goes up, so do the mortgage rates. And it's recently gone up a lot, ultimately making homes more expensive for home buyers. And finally, you've got supply and demand. With so many homeowners locked in on their sub 5% mortgage rates, there isn't enough inventory or supply hitting the market to satisfy the buyers. And we all learn supply and demand. When supply is low and demand is high, prices shoot up. A lot of studies have been stating that this is looking like the new norm and that we won't be having a housing market crash. And this is because we're not going to see a ton of foreclosures. Since the 2008 Dodd-Frank Act, lenders have been protecting their consumers by properly underwriting their loans. And all this means is that if you've gotten a mortgage, you can afford it and you probably won't default.
But that still doesn't mean that you'll be comfortable or that it's smart to get a mortgage right now.
But there y'all have it, the concoction of reasons why home affordability is so out of reach for so many people right now. I believe that really goes a long way being able to understand why we're currently in the situation that we're in. And the solution here is actually quite simple. It would be to move to a lower cost area. Like these small markets haven't seen the same 50+% inflation rates that these large metro areas have been experiencing. And I know, we don't want to leave our families or anything, but like if you can work remote, it's just definitely something to consider. And drop a comment if there's anything in particular that y'all want to learn or see next. Appreciate y'all for tuning in. Until next time.